In a bold move, the Karnataka garment and hosiery industry is pushing for significant alterations to the Goods and Service Tax (GST) Act, demanding a streamlined 5% GST on all apparel and hosiery items, alongside the integration of petroleum products under the GST umbrella. This audacious proposal aims to address the convoluted nature of the current tax system, which features a multitude of tax brackets for garments, compounded by the exclusion of petrol and diesel from the GST framework, resulting in widespread confusion, increased expenses, and contributing to inflationary pressures. Industry leaders, spearheaded by Sajjan Raj Mehta, a prominent trade activist and former president of the Karnataka Hosiery and Garment Association, presented their case in a detailed memorandum to Finance Minister Nirmala Sitharaman. They argued that a unified 5% GST would bring about much-needed price stability, streamline compliance procedures, and minimize classification disputes. Moreover, they emphasized that bringing fuel under the GST ambit would significantly reduce cascading taxes and input costs, particularly benefiting sectors such as textiles, where transportation expenses are substantial. Mehta highlighted that this transformative shift would enhance transparency, curb overall costs, and harmonize prices across different states, addressing regional disparities. Addressing potential apprehensions regarding revenue shortfalls for states, the industry proposed a phased implementation strategy, coupled with transitional compensation measures until tax collections stabilize. They also underscored the consumer-centric aspect of their proposal, noting that garments are indispensable for all individuals. A comprehensive analysis of the legal intricacies underlying this tax reform can be found here. https://.taxscan.in/case digest in 2 volumes/ Mehta implored the GST Council to adopt a forward-thinking approach, balancing economic growth, price equilibrium, and state revenues, as reported by the Indian Express. This pivotal request from industry leaders is now on the agenda for the upcoming 56th GST Council meeting, scheduled for September 3rd and 4th, which is anticipated to usher in sweeping tax reforms. The current 4-tier tax structure, comprising rates of 5%, 12%, 18%, and 28%, might be simplified into 2 primary slabs of 5% and 18%. Meanwhile, luxury and sin goods could face a steeper 40% GST. Household essentials, currently taxed at 12%, could see a reduction to 5%, while household appliances and electronics, presently subject to a 28% levy, might experience a downward adjustment to 18%. These proposed changes aim to create a more equitable and simplified tax regime, benefiting both consumers and businesses alike. Stay tuned for further updates and support our in-depth reporting by subscribing to TaxScan Premium. https://www.taxscanin.me/tapscaninsights for real-time insights.